Even the most optimistic tallies, exit polls did not predict this, which is why you are seeing possibly a huge gap up as markets open this morning. But let's also look at what happened in Jharkhand, another key state which had elections here. The India Alliance is led by Jharkhand Mukti Morcha, which is an ally, has ruled, and 56 seats for them versus 24 out of 81. So clear winners on both sides. But let's give you the breakup of Maharashtra and why the markets are going to be reacting so strongly to these elections. The BJP has won 132 seats out of 149 they contested. That means their strike rate is over a 90% of success. Let's go to the Shiv Sena, headed by Eknath Shinde, has won 57 out of 81 seats contested. NCP, headed by Ajit Pawar, has won 41 out of 59 seats contested. That means the entire alliance has done very, very well. But in those numbers, the BJP number becomes important because they have now, for the first time in many decades, crossed the 100 mark on their own. No party really has. For the Shiv Sena UBT, the strike rate has been very poor. This is the Uddhav Thackeray faction. 20 seats won out of 95 contested. For Sharad Pawar's NCP, also the strike rate has not been too great, but for Congress, it's the worst. 16 seats won out of 101 contested. So the strike rate really dismal over there. And for NCP Sharad Pawar, 10 seats won out of 86 contested. So this is the number breakdown as the final tally has shown according to the Election Commission. But why is this important for markets? And let's come to that. That really then becomes key, because you saw a rally on Friday looking at a possible win of the Mahayuti, but the extent of the NDA victory has not been priced in the Friday rally, which is why you're going to see a big bump up today. Apart from this, the fact is that a strong mandate for the BJP alone ensures a stable 5-year term. They have 132 seats on their own. So for a state which in the last 5 years has seen musical chairs in terms of parties and chief ministers, this means stability. And why do I say that? Because now the alliance partners of the BJP, their bargaining power for the chief minister chair has shrunk massively. Neither Eknath Shinde or Ajit Pawar can really bargain for the chief minister's chair. Having said that, we do not know who will be the chief minister finally, but the chances of a BJP chief minister become stronger. This means that projects already announced in the state will now pick up speed. At the end of the day, that's what markets are looking at a core. The central government spending is expected to pick up now that crucial Maharashtra elections are over. Capex spending for the government has actually been 17% below what they have projected in the budget. So that could pick up now, and that really is the big boost. Infra, reality, FMCG, all of these top sectors as a result are going to be in focus. So two big things to talk about this morning before we get to our first conversation. One, of course, is the political setup, but even the global setup is looking positive, because if you look at how US markets closed on Friday, they're continuing their up move, they're continuing their rally. Which is why you're seeing the Nifty implied open up about 400 points. The Dow was up 426. So that rally sort of continues in the US. Bond yields came off a bit, so 4.37 on the bond, because a lot of mixed data coming in over the last 48 hours or so. Brent prices, crude prices have gone up. Over the last 1 week, the Brent has gone up about 5%. $75 mark is where it's hit as Ukraine-Russia warfares, of course, increase. But look at Asia this morning, and let's pull up key Asia indices. All of them in the green. The Nikkei up about 1.5%. Nearly. And so that's what we can hope we see in India. Even if you look at fund flows from Friday, of course, the exits continue, but the volume of exits has come down. Foreign investors down 1,278 crores. Domestic investors also didn't buy much on Friday, actually, 1,722 crores. So was it retail investors who could be laughing all the way to their bank and put their faith in the markets on Friday? I'm going to ask that question to Arvind Sanger, who's joining us now. Arvind, great to have you here with us this morning on NDTV Profit. So many factors to break down, but let me start with your take on whether you think the FII view gets impacted in any way with the kind of results we've seen coming out of Maharashtra.
I'm not sure that a state election should matter that much unless you tell me that the central government has not been spending money, what you were just talking about, on capex, and other disappointments that we've seen in the economy are all going to be fixed because of Maharashtra election. If that's the case, then I think FIs will care. But I'd like to see more clear evidence of why the capex has been missing in action, how that'll get corrected, and how some of the other weaknesses that we've seen, whether it is demand from for power, or whether it's FMCG weakness in demand, a lot of things that seem to be a problem. So I guess there will be a rally here. My concern short term is we need to see the economy, which seems to have gone through what I would call a mid-cycle slowdown, clear evidence of that mid-cycle slowdown getting behind us to get really excited. And if this election does that, then fine. But I think FIs will want to see a little more evidence.
Good morning. It's Amina joining in as well. So where is the bias? If you were buying, are you buying US? Are you buying India? Or are you buying India, China, Japan? Allocations are being made. Money is on the sidelines. But where is that money going to go then?
Well, look, the US market has been on fire. President Trump's election has been a huge tailwind for the US market. So the US market is clearly in a separate trajectory than either Europe or emerging markets. But that doesn't mean that all the money is going to only go in the US. US has the whole AI boom. It's clearly the big winner there. And US obviously has a lot of deregulation, taxes, all of that hope built into the market. So the market is not cheap. I would say China was the value market, but it seems like China is not following through, and it's going to be in the kind of bullseye of President Trump when he comes to office in terms of tariffs. So, India has been kind of one of the standouts in the emerging markets from a growth standpoint. I think India will still get the long-term investors interested, because I think the growth story in India long-term is still on solid underpinnings. The political reality is that today's election confirmed that India is politically stable, notwithstanding whether there's a coalition of the government at the center or not. And the economy, notwithstanding the short-term weakness that we've seen, has all the underpinnings for long-term growth. So I think India is a place we're looking to put money. We've been patient, waiting for some of the dust to settle on some of this economic weakness. But outside of the US, India remains one of our favorite markets.
Yeah, completely agree with you, right? This is maybe an interim euphoria that the markets are reacting to. But you highlighted political stability, and we've seen what's happened in the US with Trump coming into power. While stability was never an argument there, it's meant excitement around the economy. So if India has political stability, India has corrected significantly, I would say about 10 to 12% on the benchmark, 20 to 30, maybe up to 50% in Modi picks in so many ways that the world had been betting on. So valuations are a lot more attractive today than they were maybe a few months ago. What else do you want to see to add that extra dollar into India? Because let's not forget that the markets respond before the economy responds. So preempting an improvement in the Indian economy, I would imagine people would want to come and buy into the market, right? Because then you've lost an opportunity if you wait too long.
People preempt the economy when valuations have gotten attractive. Valuations are not attractive measured from a peak. Valuations are attractive measured from a long-term valuation. So let's not confuse using near-term reference of if things were very expensive and they're less expensive now, therefore it's a great value. So yes, India is attractive. Yes, India has long-term growth. Has India gotten to attractive valuations in terms of any historical measure? Not yet. Have the mid caps or the small caps gotten so cheap that they're at trough valuations from a historical perspective? No. But that doesn't mean that we're not able to find attractive opportunities. Yes, we are finding, but to jump in with both feet, either valuation would have to get that attractive, or growth would have to seem to be on a very accelerating trajectory. And I think we're kind of nibbling at it, but we're not in with both feet, because neither one of those cases, to us at least, is a very obvious case right now.
Arvind, I'm just wondering that with the kind of risk-on mood that we're likely to see, and the rise that we're likely to see in markets this morning, is this another cue for FIs to deepen selling? Because if the plan is to exit, then you're exiting at better rates.
I'm not sure that the FI are waiting for an exit. The FIs are looking for where the best risk reward is. Let's be clear, the FI has been right so far, right? If you're putting your money into the US and you were selling India a month ago or 3 weeks ago, you've done pretty well. But the question is, I think a lot of the good news in markets like the US is already in. If you were betting on China, which we were not, but if people who were betting on China, clearly, that hasn't quite played out as they'd hoped. I think, India's, look, I'm not saying India is unattractive. What you're trying to get me to say is it time to dump India? No, that's not what I'm saying. I'm saying, yes, FIs have been taking chips off the table, but it's not like taking chips off the table from India and rushing into, Brazil or China. US is still the best growth story in the world in terms of the benefits of AI. But India is the long game, steady growth story in emerging markets, and that's why India remains attractive to us. It's just it's not quite as compelling when the growth itself seems somewhat tepid right now. And I'd like to see signs that that the growth is reaccelerating to get much more bullish on the Indian economy. I mean, in the Indian market.
Attractive, but not very, very attractive. But you did mention that you're nibbling into Indian markets. It is a bottom-up approach, I would imagine. You also mentioned consumption is what you're slightly concerned about. What is it that you like, where you see there is value and the risk reward is favorable? So maybe sectors, maybe stocks, I'd leave it to you.
Anything, in our opinion, domestic healthcare related, we find that area attractive. We find some of the things in, kind of infrastructure related, although there's been some disappointment lately, industrials related, there are some interesting opportunities there. Things have corrected a lot. And so, those are some of the areas that we are most interested in, even in some of the high quality, banking sector, and even some of the second tier banking sector, things have sold off a lot. So if the economy is going to bounce back, then it's not going to do that without the financials being a part of it. So that's another area of interest to us. So there are a few areas which are interesting. And again, it's bottom up, so it's discrete stocks rather than making a big sector bet. But yeah, there are some areas where there are more opportunities than others.
Arvind, always good talking to you. Thank you for adding that perspective. For now, we will enjoy the euphoria that, of course, Nifty is expected to see. Maybe short-lived, but for now, it looks very well placed. A 400-point uptick on the index is what we have. The gods are kind. Global cues are also very positive. So we really have no reason to be sulking in today's day of trade. Let's quickly take you through why this is going to be an important week. So, of course, today is going to be all about reacting to that Maha victory in Maharashtra. But you've got a bunch of big events globally and locally. So you've got FOMC minutes on the 27th of November. That will give the street clues of a rate cut in December. Remember, the bias used to be towards a rate cut by the Fed. Now it seems more or less a 50-50 picture. US GDP third quarter numbers are also expected, and you've got a whole bunch of other US data that markets will react to. Back home, you've got India's second quarter GDP data that's expected on the 29th of November, likely to come in below 6.7, which will, of course, spook the street if it's not already priced in by then. Globally, all eyes will remain on the Russia-Ukraine conflict. Remember, crude is up 5%, gold is up 6% last week on back of rising geopolitical concerns. In the primary market, Enviro Infra Engineers IPO subscription closes on November 26, and you've got all eyes on the NTPC Green IPO that will list on the exchanges on the 29th of November. It's also your monthly F&O expiry on Thursday, so markets will remain fairly volatile on Wednesday and Thursday. So that's what you have to watch out for globally and locally. Back home, I think we've already talked about it, and everybody must have read this on the weekend, that it was a very strong up move on Friday. I would like to say that we actually called it. We didn't know why that would happen, but technically speaking as well, the markets were looking ripe for a reaction on the upside on the street. The Nifty has finally snapped a 2-day losing streak, and we've actually recovered from very recent lows that we've seen. There was a very strong relief rally of 2.3% on Friday, bringing it up to a 1.6% up move for last week. Bank Nifty Nifty did well, closed comfortably above 51,000 with a gain of 1.5%. 34 of the 50 Nifty stocks gained in trade. Adani Group stocks, as well, we talked about this on Friday, recovered quite sharply after the markets opened up at about 9:15. So what are we expecting today? A gap up on the Nifty and Bank Nifty is what's expected. Remember, the premiums on the calls will be very, very large in the first few minutes of trade. So if you were sitting long, if you'd taken that advice on Friday and initiated long positions, then you would be laughing your way to the bank. But if you don't have long positions and you're waiting for the event to conclude, then you're better off waiting it out till 9:45, 10 o'clock, because markets always will give you that intraday dip or consolidation. At that stage, the advice coming in from most is that you want to play the long trade. What will you buy, right? That's the big question. Of course, you're not going to get the values and the prices that we saw 3 to 4 days ago, but Modi picks will be back in style. So stocks from the defensive pack, stocks that are PSU banks, railways, anything PSU in nature, which has been the trade for the last few years, comes back in fashion. These stocks are now 50 to 60% lower than what they were only a few months ago. So very attractive bets. The theme will remain Modi picks. On the upside, the Nifty will very closely track 24,150, followed by 24,300. On the support, you want to try and see that you hold on to 23,260, which was the interim bottom made for the index early this week. So looking very healthy, looking good. It is advised to go long, but don't be too brave and initiate longs in the first few minutes of trade. You want to give it a little bit of a breather, also because your calls will be very active. You've got F&O expiry on Thursday, which means the premiums will be jumping all over the place. So if you want to take profits from Friday's trade, that really depends on your risk profile. But I would just wait it out, wait for the markets to settle, and then initiate fresh longs if I had the choice.
You know, I'm a little more optimistic on whether this will continue. I mean, of course, we'll wait and see what happens. But my sense is that you are seeing the beginning of a risk-on rally. This is not just going to be one day or half a day of Maharashtra election buzz. You're going to see much more coming in, because a lot of things, a lot of paradigms have shifted because of the kind of win. So in terms of policy, I would say courage, quote unquote, to do things to really boost the economy, that comes in now. Mega spending comes in now. And one overhang from June about whether the government at the center is really stable completely vanishes. I mean, no ally is going to have, to put it simply, the guts to do anything after this kind of a victory. So I think you're looking at a longer risk on, sort of a play, and not just half a day, okay, let's sell and go out.
My only limited point, Tamanna, is there that when we were selling off, we were not selling off for these reasons. Those reasons still remain. So you've still got growth that is slowing. Of course, with more going out, consumption
your capex is going to go up.
Pick up.
Your government spending is going to go up.
Capex was always expected to pick up. So we've all talked about the fact that government spending from November, December will seasonally pick up.
Okay.
Valuations are still stretched, so that doesn't change. Trump is still there, which doesn't change. So I think while I know a part of me also would like to believe that this may be long drawn, I don't think it's going to be a one-way journey. For now, we'll enjoy what we see on the screen, which is a strong up move. And maybe technically this is a well-placed market. But we are also going into a seasonally very strong period for US markets historically.
I think it is going to be longer than just a temporary reprieve. But we'll wait and see how it happens. Okay, you have different views over here, and then we'll wait and see how it pans out. All right, stocks to watch. There's a huge list because you're going to see a bump up today. But I'll start with Zomato, simply because they got included in the Sensex in place of JSW Steel over the weekend. And it's not just a prestige position. It's fairly big deal for a Zomato to get there in what is relatively a short time. The Sensex inclusion, of course, indicates increased flow. The weightage may not be that much. We'll have to wait and see what those details look like, because JSW Steel's weightage was not that much. But definitely, it's a thumbs up for Zomato after all the flow of good news that has continued. I'm also picking Mumbai-based realty stocks. So Macrotech, Keystone, Godrej Properties, all of them as a thumbs up because of the Maharashtra election outcome. It's a big positive For anyone developing in the state and in the city of Mumbai, it's going to be good because you have continuity in terms of policy outlook from the same government coming in on a stronger wicket. So ongoing projects could catch speed. FMCG in focus because look at what has been the cornerstone of the success in Maharashtra. It's the Ladki Behan scheme, which is essentially 1,500 rupees in the accounts of women in the state. And that has really helped. You saw even voter turnout in women go up nearly 6% compared to the last election in 2019. That means they're going to be copycat schemes. They already are, honestly, but even more focus across states, across governments at all levels to give cash handouts to women. And when that happens, what they spend it on are essentials, which is why Britannia, ITC, or Colgate-Palmolive, all of these in focus today. An interesting note from JM Financial where they've been a little, I would say, circumspect also about these schemes. They've sounded off a bit of a warning saying what happens to state finances if everyone starts giving out these cash schemes. But nevertheless, whatever the economics of it is, the politics is clearly showing that this is going to be a huge positive. So expect more people to do it rather than less. Yeah.
Yeah, I think those are going to be good spaces to track today. Also because, remember, consumption has been struggling significantly in the last 2 months. It's been one of the biggest sectoral losers all through the period of October and November so far. I have a lot more stock-specific trades that we will track. RVNL for more than one reason. One, it's the railway trade, which is the Modi trade. But beyond that, they've also signed a JV with SCPL and they've received a letter of acceptance. It's a significant order in that sense to the tune of 837 crores. So if you're looking to trade, RVNL could be one interesting one to watch in early hours of trade. A couple of the other counters that I have is Aurobindo Pharma. Now, Pharma may not gain because the macro sentiment is positive, but Aurobindo Pharma specifically has made a collaboration and a license agreement with a global pharma major for respiratory drugs. We don't know the size of the market of this, but it has to be a significant one given the fact that most parts of the world you have people suffering from respiratory problems. The agreement will be to develop respiratory products. Both parties will co-exclusively commercialize this product. Each party will contribute 50% of the cost incurred and they'll make an upfront payment of $25 million. The total contribution for Oro is capped at $90 million for the development period. When this becomes revenue accretive is what we'll understand as we go along through the course of the day, but it's a big positive up move for Aurobindo Pharma. Alembic Pharma, on the other hand, will probably be on the sell side. They've had Form 483 with 5 observations for the Gujarat facility. The stock will be reacting negatively to that news flow. Apart from that, a quick mention on VST and AkzoNobel. VST has gone ahead and sold an immovable property of 100 odd crores. So this could be money coming into the bank, cash flow positive. The stock should react positively. AkzoNobel, on the other hand, has got board approval to go out and sell their non-core immovable assets. So that could also see a positive up move. But I think, Tamanna, the stocks of the day will be anything PSU, consumption, like you said, in Bombay Realty.
I think Bombay focus. Bombay becomes big.
Mumbai, I think, is what we are supposed to call it.
Mumbai is a place on a map. Bombay is an emotion.
An emotion.
But nevertheless, one emotion which is very clear is that it is victory for the NDA. And listen into what Prime Minister Modi said, thanking voters for their support after the Mahayuti's victory. He also spoke about what young India is focusing on. Listen in.
आज बीजेपी हमारे शहरों में ग्लोबल स्टैंडर्ड के इंफ्रास्ट्रक्चर बनाने के लिए लगातार काम कर रही है। चाहे मेट्रो नेटवर्क का विस्तार हो, आधुनिक इलेक्ट्रिक बसें हो, कोस्टल रोड और समृद्धि महामार्ग जैसे शानदार प्रोजेक्ट हो, एयरपोर्ट्स का आधुनिकीकरण हो, शहरों को स्वच्छ बनाने की मुहिम हो, इन सभी पर बीजेपी का बहुत ज्यादा जोर है। आज का शहरी भारत ईज ऑफ लिविंग चाहता है और इन सब के लिए उसका भरोसा बीजेपी पर है, एनडीए पर है। साथियों, आज बीजेपी देश के युवाओं को नए नए सेक्टर्स में अवसर देने का प्रयास कर रही है। हमारी नई पीढ़ी इनोवेशन और स्टार्टअप के लिए माहौल चाहती है। बीजेपी से ध्यान में रखकर नीतियां बना रही है, निर्णय ले रही है। हमारा मानना है कि भारत के शहर विकास के इंजन है। शहरी विकास से गांवों को भी ताकत मिलती है। आधुनिक शहर नए अवसर पैदा करते हैं। हमारा लक्ष्य है कि हमारे शहर दुनिया के सर्वश्रेष्ठ शहरों की श्रेणी में आए।
All right. So, of course, that was Prime Minister Modi speaking after the Maharashtra victory. Gautam Duggar joining us now. He's head of research, Motilal Oswal Institutional Equities. Gautam, hi, good morning, and great to have you on. And very interesting note, actually. I think Motilal Oswal was the first to come up with a note very quickly after the elections. Though a win was getting priced in on Friday, I think the magnitude or the extent of the victory was a surprise to everyone, including you.
Absolutely, Tavanna. Good morning. Thanks for having me. It's unprecedented, and I follow politics very closely. So, especially in the context of Maharashtra politics, at least I have not seen this kind of a magnitude of a victory in the last 3 decades. In fact, 235 is something which even perhaps the exit polls, which predicted, I think the highest poll prediction was 175, 180. Even they couldn't predict it. Just look at the sheer magnitude of this victory. 50% vote share, 90% hit rate by BJP, 77% hit rate by all the three partners put together. And in 6 out of 6 regions in Maharashtra, they got a seat share of 70 to 85%. The fact remains that Congress also, which got 13 seats in Lok Sabha out of the 17 that they contested, they got only 16 out of the 100 that they contested in the assembly election. In fact, you would have read it in the media, the magnitude of the victory is so humongous that opposition parties are not in a position to put a leader of opposition post also. So it's beyond anyone's forecast. It's good because Maharashtra had seen a lot of political instability in the last 5 years. In fact, it was afflicted with the chronic instability, with so many musical chairs, parties changing, people changing parties. And this is one of the most important state, the industrialized state, I would say. GDP contribution more than 13%. So economically, obviously, it's one of the most important state of the country. And the state was impacted with political instability. So now, with the largest party having almost close to majority, I think the governance and the focus on policy making should return. And we should have hopefully now 5 years of focus on growth and development. So this is very important because it's not just about the state, but it also has implications for the country's overall policy making agenda as well as the growth ahead.
We've been having a little bit of a debate in the studio. Why don't you weigh in between Samina and I on whether this risk on or whether this upside, this great mood that we're seeing today, an implied open about 450 points up, fizzles out quickly enough because the moment that there's a bump up, people come in to sell, or are we now seeing a longer standing change in mood because of the kind of election result and then the confidence that now policy push will be greater?
Tavanna, it's very difficult to put a finger on the short-term trades, because see what has happened in the last 2-3 months. Market has had a very decent correction now after a long time. I mean, October market corrected 6%, and October 24 was the first month after March 2020, that is the COVID month. So essentially 55 months has passed before market seeing a monthly 5% plus correction, right? But at the same time, market corrected not just because of issues around politics. obviously that was one element. There was anxiety around Maharashtra election, more so after the Lok Sabha verdict. But at the same time, earnings had also tapered off. The geopolitical situation is always fragile nowadays, so nothing new on that front. And of course, the US elections and the strengthening of the dollar index that we saw, and then coupled that with the fact that the 2 months have seen close to $17 billion of FI selling. So net, if you see, Nifty had a close to 10% correction before Friday. And between April to October, or at the end of the second quarter FY25 earnings season, the Nifty earnings estimates also got cut by 8% for FY25 from 1140 to 1060. So I would reckon that market has been very fair in that sense. You've not seen any major derating, at least in the large cap indices. We had 8% correction and market corrected 10%. Mid cap indices, small cap indices also corrected just 10%. Very rarely it happens that when large cap indices correct 10%, mid cap, small cap also correct only 10%. Typically, if you see past episodes of corrections, the mid cap and small cap indices have always corrected more than large cap, given the inherent volatile and high beta nature of those indices. This time, the correction was of similar magnitude because of a very strong wall of flows from domestic funds or domestic retail investors. Right now, obviously, this election, this verdict changes the sentiments in the near term. At the same time, you've seen large cap valuations becoming far more reasonable now, because now in another month or so, people will start discounting FY26. And third, more from an economy perspective, the first 6 months, the total government spending at the central level is absolutely flat. 1H FY25 over 1H 24, no growth. And within that, the capex spending was down 15%. That is where some hopes are emerging now. Now that politics is behind, the key state elections are behind, and the next important state election is only in October or November 2025. So capex spend should come back.
Indeed.
Rural demand is recovering. So a lot of things are slowly
Gautam, and I want to come in on that one. It's Samina joining in as well. With rural spending recovery, wedding season demand, how should investors now position themselves in the consumer discretionary stocks? So I want to try and get actionables from you. So people who, of course, follow you and believe in you would like to know, how do they play the space now?
So Samina, good morning. I think we have a very clear situation here where the low ticket consumption items have seen a bit of a hammering. If you go by the syndicate data about Nielsen or Contra. And of course, it corroborates very well with the management commentaries that we heard in second quarter FY25 earnings season. So staples, some of the select discretionary stocks have had a very tepid last 3-4 quarters of volume growth. And reasons are different. The latest excuse or reason which has emerged in the quarter that has gone by is the urban slowdown or urban stagnation. Last 2 years, we had seen rural slowdown in demand, which is thankfully now picking up, and monsoon has been good, right? So as far as actionables are concerned, we've been very clear for last 3 years that money will be made in consumption over a slightly longer term in discretionary stocks rather than staple stock. Because as the per capita income increases, the propensity to spend towards discretionary items go up. So what do we like there? If you look at our model portfolio, there is a broad smattering of discretionary stocks out there. So we like jewelry, within which we had Titan and Kalyan also in our model portfolio. We like Indian Hotel, which is amongst our top 5 mid-cap ideas, though I don't know if it is still a mid-cap as per SEBI classification, because the market cap is now upwards of 1 lakh crore. We like the space that you were just discussing before I joined you, which is the food delivery space, wherein we like Zomato. And then there are mid-cap discretionary stocks like Metro, Cello, where we have a very positive view. So consumer discretionary is where we would want to place our bets, and which is where our overweight in consumption is concentrated into in our model portfolio.
This market cap wise, right? Among your large cap recommendations, you've got M&M, SBI, L&T. Which do you believe offers the best near-term upside, and why?
So again, Samina, without quantifying a short-term, near-term upside, because it's very difficult and beyond anybody's reach to forecast what the stocks will do in a week or 2 weeks time. Fact remains that M&M has been our preferred idea for 3 years now. In fact, we don't have Maruti in our model portfolio since 3 years because we converted our entire Maruti position into M&M almost 3 years back, and just paid out pretty well. If you see M&M's underlying fundamentals, they've been as strong as ever. And now with rural recovering, I think it'll provide a leg up to their tractor business. SUVs has anyways been strong. And plus the SOTP angle of M&M, the rest of the businesses in the group, which are part of the M&M SOTP, they're also doing quite well. SBI remains our absolute favorite in PSU banks. We've almost a 4% weight for SBI in our model portfolio. 18-19% ROE, stock trading at 1.1 time, asset quality absolutely fine. Trade growth about 11-12%, or sorry, maybe 13-14% for SBI. So valuations are absolutely mouth-watering for SBI at this stage. And of course, L&T, reasonably priced in an overall, I would still reckon an expensive space, which is industrials. The stock has done nothing, pretty much nothing for the last 1 year. But if you see, the balance sheet has improved significantly for L&T, and visibility of ROE improvement is also there. Right, so I would go ahead and say that L&T today is the most reasonably priced industrial/capital goods stock. So those are our top 3-4 bets. But to say which one will give what return in the short term is very difficult.
Gautam, since we've not spoken to you after the Q2 misery, do you think that this was something that will improve in the second half? I think your own outlook is that you will see at least a 9% bump up in revenues overall, if I'm not mistaken. So is there an underlying issue that you're worried about as far as corporate results are concerned?
So, Tavanna, this moderation in earnings, I would reckon, while concerning, is not alarming because this is a P&L slowdown, if you will. Balance sheet remains as strong as ever. The corporate India's net leverage is at a multi-year low, maybe 12-year low. Cash flows are still very strong. In fact, if you do a slightly deeper and deep down analysis of the second quarter FY25 earnings, you will find that a large part of the agony was brought in by commodities because our first half earnings are flat, but ex-commodities, they have grown 13%. Right? Similarly, for Nifty also, first half earnings have grown only about 4%, but ex-commodities, they are up 12%, which of course is a moderation because last year, FY24, we had seen 30% earnings growth for our coverage universe and close to 24% for Nifty. So definitely there is a moderation, some amount of base effect playing out because FY24 saw a sharp rebound in margins from the lows of FY23. We expect FY25 second half to be much better at an aggregate level. But ex-commodities, second half FY25 will also have similar underlying operational trends like 1H FY25. So if you see second half FY25 on an aggregate basis, growth moves from 0 to 9 for our coverage universe. But at ex-commodities, it remains at 13%. 26 is where we are seeing some hopes now of about 15% plus kind of an earnings growth. So if 1240 is the EPS that we are forecasting, and the actual number is around about there, then perhaps you're trading below 20 times price to earning for Nifty today, which while not cheap is not exorbitantly expensive, right? Because Nifty was trading at about 22 and a half times till about 3-4 months back.
Right. Gautam, one quick question, and this is again alluding to your note. FIs have sold heavily through October up until Friday actually. What factors could reverse this trend and how critical is this for sustained market recovery? Along with that, you also highlight that the very fragile geopolitical setup could have an impact on our markets because of higher commodity prices, a stronger dollar. So keeping that as your backdrop, what are your thoughts? How significant is FIs coming back to our market recovery?
So, Sabina, the one segment of the market selling, today does not have a very disproportionate impact. And that's very good for India from a long-term perspective because now you have alternate pool of sellings which is able to absorb that sales flow. And it's very healthy because, if you keep aside the last 1-2 months of selling, look at the last 4 years of cumulative FI flows. They're absolutely flat. right? Very flattish in the last 4 years, right? Whereas the DII flows in the same last 4 years is touching now $110 billion. In fact, this year itself, calendar year Y2D 2024, they've crossed or about to cross $55 billion. And we still have about a month and a week still to go, right? Very difficult again to forecast the short term direction of flows. But suffice to say that the selling intensity, which we saw in October, has reduced considerably in November. Average October selling per day was, I think, somewhere about 3.5 to 4,500 crores. This month, it has already come off to about 1,500 crores. Let's see, because the underlying corporate earnings is also softened. So if that outlook improves, capex comes back, and you don't have any incremental fragility on the geopolitical front, possibility of FI flows reversing cannot be denied.
Thank you, Gautam. It is looking good. Whether this mini risk-on rally continues slightly longer term is what we'd love to see. But thank you for joining us. Great to get perspective from you. Lots of trading ideas, lots of investment ideas coming in from Motilal. Well, Akshay P. Bhagwat, now Senior VP GM Financial, joins in with his F&O ideas this morning. Akshay, good morning. Thank you for joining us. I'm assuming call premiums would be going out of whack in the first few minutes of trade. Let's start with, what should a trader do who has not got a long position carried forward from Friday? I, of course, think there will be a midday dip consolidation which could potentially get bought into, but we also have F&O expiry this week. So how do you approach the index for a trade?
Good morning, Samina. Well, yes, it's a very strong start for the Monday, and really how Nifty plays out, whether it manages to hold on to the gap gains or it kind of cools off, is the question mark. So I would say that if you are a short-term or an intraday trader, prudence says that you need to wait out a bit. As you rightly mentioned, ideal dips should be somewhere around 24,100 odd zone to take a buy trade, because the gift Nifty is hinting for a strong start about 24,250. So I would personally wait if I'm a intraday or a short-term trader for a slight dip till 24,100, 150 to take a buy trade. But overall, the setup is really very encouraging. 2 days of very strong short covering bout, and today 24,000 call writers will be further challenged once the Nifty opens. Really, the targets, as I see right now, is 24,500, which Nifty should be heading for, and this may happen within this week itself.
Being more optimistic than most, but let's hope you're right and we hit that 24,500 mark before the monthly expiry. In terms of stocks, you're recommending buying Bajaj Finance calls. You want to walk us through this? What is the target? What is the stop loss and the duration for holding?
Yeah. So the options trade, the first trade is Bajaj Finance. If you look at the price chart, in the last 8 months, there have been 4 instances where from the area of 6,500, we have seen massive recoveries in Bajaj Finance, each recovery working out to almost 800 to 1,000 points from the 6,500 zone. And I believe this time it's going to be no different. Again, we are going to witness a strong rally, but the trade positioning should be in December, because we are avoiding the time value decay, which might affect the current expiry. So the buy trade is a plain vanilla buy option for the 26th December expiry. The strike to buy would be the 7,000 call, and you buy it on the opening with a target of 162. The second target, or the extended one, can be 194, and you can keep a stop loss of 67 on the option premium in this trade.
About Reliance Industries, it had quite a run in terms of recovery on Friday. Constructive on Reliance as well. What's the option trade there?
Yes, so I'm targeting heavyweights here. Reliance has been heavily oversold, one of the major weightage companies of Nifty 50. And if really Nifty has to gain, Reliance has to take the leadership from here on. At the levels of 1265, it's heavily oversold. Positive divergent signals are evident. And really, I believe December is the month to take a trade on, because volatility is going to get harder for the next 4-5 days. So take a trade in December to tide over the volatility. The strategy is very simple. It's a bull call spread for the 26th December expiry. Here we are buying a 1280, slightly out of the money call, which closed around 30 as on Friday. And we are at the same time simultaneously recommending to sell a deep out of the money 1320 call at the premium of 14. So what happens is your risk is limited by setting this bull call spread. And if the stock moves up on the expected lines to the targets of 1340 plus for the month of December, you can easily target a profit of around 7,500 on this strategy. Keep a stop loss of 4,700 as a risk management overall in this strategy.
All right, thank you for that, Akshay Bhagwat there. And how optimistic is Akshay? He's saying 24,500. Kush Bora is with us in the studio. Quick view from you, Kush, before we get to our focus on Zomato this morning. All smiles as I can see. 24,500 is very, very doable, which tells me that it's not just a day's trade. The tide is, in that sense, changing.
So if you're excited with 24,500, I wonder how elated will you be for a target of 24,800. That's the second target that I'm gunning for.
This week?
This week, see, the timing of it is always under the question, right? But you would now play for that kind of a level. Earlier the view was 24,500 is where, the turnaround might happen and, we might see some sort of a pullback from the markets. But this kind of a thumping, move, 24,800, 25,000 is also quite likely. Now, it may come this week, it may come next. But as long as the direction is not downwards, I think we'll take that.
Not if it comes next year.
No, it's not. I don't think he's saying is looking like
that's
next
not,
year.
No, that's
actually,
not what
next year is not that far away also.
Exactly.
Even then, I don't think it's going to be perhaps next year. Perhaps somewhere, in a week or two's time, it should, at least 24,800 is what I'm gunning for.
Okay.
Yeah.
So 24,800 is, so would you go, what is the strategy then for the day?
Sure. So just a quick couple of points. It'll be interesting to see if the FII selling that's been going on for 38 odd sessions still persists, after a move like this. And this is a follow-up move. Also, what I want to see is the mid-cap and the small-cap action, which was actually missing on Friday. So if those things sort of start to fall in line, then I think 24,800 is not really such a stretch. Now, as Samina's already pointed out, twice over, I fall in that camp, which is that you can't go long on a gap up of 400, 450 points. You need to wait for a pullback. Close to 24,200, 24,150 is where you create that long position for targets of 24,500 and 24,800. 23,900, the Friday closing, that will now start acting as your stop loss.
Are you sure you'll get that pullback opportunity? This is the question, no?
That's the hope, right?
That's the hope.
You know what? Even if you don't get that pullback, it's still a good thing because, which means the markets are sustaining the 24,400 kind of a gap.
So what, if you don't get the pullback, then what do you do?
Don't trade. Don't go long today at least.
Don't go long today. Okay, so that's the clear long and short of it. Don't go long today if you haven't already on Friday. If you can find a time machine, go back in time, then that's a good idea because no one really saw this coming. 420 points at least up on the Nifty implied open. All right, focus on Zomato. The stock is all set to enter the BSE Sensex index. It's the first quick commerce firm to make a debut on the Sensex. It replaces JSW Steel. Hiral is joining with more. Hiral, I find it kind of telling of where our economy is going. JSW Steel, old school, old economy company, Zomato, all about the new asset light in that sense, and that's made it to the Sensex. What are the implications for the stock?
Absolutely, Zomato is making its debut on the BSE Sensex, but this is the first new age company that is making its debut. An interesting move, and as mentioned as well, it is new age that is coming in. Old economy is going back. Now, who are they replacing? JSW Steel, as mentioned, that is what will get replaced. JSW Steel will be out of the Sensex. Zomato will come in. Now, what does this do in terms of the weightage? If you talk about Zomato's weightage as well, as per our calculations, Zomato will have 2.4% weightage on the Sensex. What would this inclusion mean? Firstly, this will mean higher passive flows for the company. Number two, there will be increased allocation by index funds as well with regards to where Zomato goes. So overall, this is going to be a positive. From a stock price performance perspective, what we need to note over here is you might not see a major rally that could come in at one go. It will be a gradual uptick that could happen in terms of where the stock price performance is concerned. Now, moving on, in terms of another recent update is that they've got a fundraise approval as well for 8,500 crores from the shareholders. And this is an interesting move because the company has time and again again come out and said that with the expansion plans that they have in place, the cash flows have been depleting for them, and that's one of the reasons why they're looking at this kind of an uptick. Moving on, how has it powered the investors so far? 2.3 times is the up move in the last 1 year. And if you see in the last 2 years, the stock has moved nearly 4 times. And I think this is one of the reasons why it has been considered to come in as a part of the Sensex. If you see the listing day stock performance as well, Swiggy, which recently listed, a 7.7% is the listing gain that we've seen since the issue price. And Zomato, a 51% listing gain is what we've seen on the day of listing. So interesting moves between both the companies as well. And very lastly, the brokerages continue to remain upbeat on the counter. You have a Morgan Stanley, which has an overweight. They have increased the target price to a 355. Apart from that, a JM Financial prefers a Zomato over a Swiggy. Jefferies, Zomato is their top pick for the next 5 years. They have a target price of 400, and Cities, India's top internet pick, they have a target price of 220 as well. So that's with regards to where Zomato goes. Brokerages are upbeat. Investors have created wealth so far. And thirdly, now with the Sensex, with the inclusion in the Sensex, the clear understanding is that passive flows will increase, fundraise will become easier for the company, and where from here on, where it's able to reach is what we have to see.
All right, thank you for that, Hiral. In fact, Karan Taurani joining us for more on that. He's Senior VP, Elara Capital, and of course tracks this space closely. Karan, great to have you on the show. I mean, I think the excitement about Zomato may drown out in the larger sort of up move that we're going to see in the markets today. But having said that, put into perspective why this is a big deal. And after all of the positive news on Zomato, is it still a buy right now?
Hi, Tamanna. Good morning. So I think what Zomato gives the investors is, comfort for high growth, better growth versus the traditional companies. And even in terms of profitability, the quick commerce business is currently at break-even point. So there's potential for better earnings growth as well. Both these segments, the food and the quick commerce segment, will see very strong double-digit growth. Food will be close to 20% plus in terms of top line, and quick commerce growth rate of 60%, 70% could go on for about 3 to 4 years basis how the non-metro situation pans out. So clearly very exciting time for investors to play on these high growth companies. And definitely, given the kind of track record and execution we have seen for Zomato, I think we're still very upbeat about its prospects. And I think in terms of valuations, the stock did make its peak at about 290, 300 rupees. And I think currently it's trading at reasonably fair valuations. And with the kind of growth and comfort that we have always got with the management, kind of always surpassing, ahead of their guidance, performing better, becoming market leaders in both the segments, and showing very resilient signs of, achieving profitability, because one has to see that this is the only quick commerce player with such a large market share at market leadership and is at break-even point largely, despite the heavy expansion that they've been doing in the last 6 to 9 months in terms of doubling the store count. So clearly, I think we do like Zomato. I think our target price is 320 on the stock, and we believe that once you keep rolling over annualized basis, we should see a 35 to 40% compounding return on this company.
Hi, Karan, it's Amina. That aside, in terms of inclusion, one other factor worth noting is the 8,500 crore QIP that has been approved now. How will this bolster Zomato's balance sheet, and what areas of business are likely to benefit most from this fundraise? What I also want to understand from you is, with this fundraise, there's going to be equity dilution of shareholders. How will the markets or investors view this, Karan?
So I think in terms of fundraise, as we all know that, the plan is very clear. They do not wish to kind of increase discounting in the business. So firstly, I think the fundraise is largely happening due to investments in the quick commerce business. That's the first thing. Secondly, the plan is not to, kind of increase discounts substantially. That is not the broader agenda. The agenda is to invest in stores, invest in the infrastructure, the supply, the technology, the inventory, because quick commerce, is just very small right now. I think in terms of market, quick commerce is only about 3.5% of the e-commerce market, and potentially it can move up to 25-30% of the market in the longer term. That's the potential that it has. So clearly, I think that is the first thing which is there. Investments are going to be heavy in terms of quick commerce. Second, I think the competitive intensity has really picked up in quick commerce in the last 6 months, right? And that's also kind of, surprised everyone. But I don't think there's anything big surprise about it, because clearly quick commerce has got a very big potential in terms of total addressable market, right? So e-commerce players are the ones who are feeling the pinch of quick commerce, which means that the quick commerce business does have visibility, for long-term growth and for long-term profitability. And that is why e-commerce players are coming into the same. So we've seen Amazon, Flipkart making inroads, and some other new players as well. So clearly, I think this is like a war chest which will be there to compete with peers. And I think, since they are market leaders, they should have a higher cash pile, versus competitors. So if you look at the competitors today in the quick commerce segment, Amazon, Flipkart, come with deep pockets. But if you look at the likes of Zepto and Instamart, which are the current existing players, I think they have a cash pile of close to $1 to $1.2 billion. And even Zomato has got a similar cash pile, after this Book My Show deal, which they've recently done. Sorry, the Paytm deal they've recently done. So I think very clear that, they want to have a higher cash pile, because the kind of scale and size they operate, if at all they have to compete hard, with the competitors on anything, whether be it discounts, whether be it, technology, whether be it in terms of experience or in terms of inventory assortment put together, they should be well prepared for the same. There should not be any market share dilution for them. So they'll make sure that their market shares are well protected despite this high competitive intensity. And that's the reason for, raising this kind of capital.
100% rally this year on Zomato. Do you believe Zomato's valuations are justified, or is it pricing in too much optimism? I also ask you this in context of the fact that Swiggy is at a deep discount in the same business, and we both know this is a duopoly.
See, I think in terms of Swiggy, one has to really go with the fact that Swiggy will always remain to be at discount versus Zomato, and there are reasons underlying the same. The three big reasons that we believe is that one is, of course, the revenue scale potential, right? So in terms of revenue scale, if you see, Zomato, both on the food and the quick commerce side, is about on an average 35 to 40% higher in terms of revenue scale, with quick commerce scale being far higher. In terms of valuation discounts, also the discounts will be maintained on the valuation multiple front, because clearly the profitability metrics are very different if you look at both food and quick commerce for Zomato versus Swiggy. And third is the hyper pure business, which gets a reasonable premium valuation and is probably operates at a larger revenue scale as well. So I think putting these three things into perspective, I think 60% discount is quite unwarranted, for Swiggy, versus Zomato in terms of total overall valuation in terms of absolute terms. Now, this discount can only converge from here on basis Swiggy's performance, right? Whether it could be Swiggy doing growth rates on par with Zomato, Swiggy improving its profitability metrics, which in turn could have a positive impact in terms of valuation multiples, right? So we haven't seen anything of that sort so far. If you look at the Q1 FY25 performance as well, which we had released, the numbers seem to be largely on track in terms of what they've been doing in the past, except for some bit of improvement in terms of food, turning profitability in terms of EBITDA as a percentage of GOV. Otherwise, the metrics in terms of growth, the quick commerce growth, the quick commerce losses, they largely seem to be online. So unless we don't see any signs of very strong execution, both on growth and profitability for Swiggy, we may not see this discount of 60% on absolute valuation terms, converging versus Zomato. That's the first thing. Secondly, Zomato, of course, the valuations are a premium, right? But one has to really see the management execution, the kind of track record they've been posting. I mean, they've entered this segment of quick commerce much later. They've entered even the food business later. But again, they've really tapped onto multiple levers as far as profitability is concerned. They've got better take rates on the quick commerce side, whether it is because of better ad revenue, better inventory assortment, better AOV. So I think the execution has been top notch. And I think valuations will always appear premium. But, as I said, every year when you keep on rolling over, there is a very good visibility of 30% plus growth. And that's going to kind of keep the stock under check.
Thank you, Karan. Always great getting your perspective on Zomato. It's become such a household name in more than one ways. Implied Nifty is expected to continue to rally, and it seems like we are setting ourselves up for a gap up in the range of 300 to 400 points. We'll take a break, track pre-open, and gear you up for trade this morning, so stay tuned.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Welcome back. You're watching India Market Open. Pre-open is indicating to a pretty solid start this morning. Like I said, in the range of 300 to 400 points is what you should be settling out in today's day of trade. 24,200 is an important resistance that the Nifty will try to take out as we progress through the day. Kush is, of course, with us, and Soni Patnaik also now joins in with a view on the market. Soni, hi, good morning. Friday seemed like we were setting ourselves up for a good rebound. But what finally happened, I don't think the most optimistic bull would have anticipated. As we go into trade this morning, a 400-point gap up is what's expected. Do you recommend initiating fresh longs in the first few minutes, or would you expect an intraday dip, which could then lead to or could encourage traders to go long?
Hi, good morning, Samira and Tamanna. Thank you for having me on your show. I think what GIFT Nifty is implying, gap up above 400 odd points, but we'll have to see what the real gap up situation happens, because there's a resistance in Nifty around 24,200 to 50. So there's a possibility that the short covering move we saw from Friday, it was on expected lines, multiple parameters were oversold. It wasn't rocket science for anybody to guess that there could be a short covering above a 23,550 levels. We saw that happening, but the next level of resistance is around 24,200 to 50. And only if that gets breached, the short covering move may sustain towards 24,500 plus levels, but that could be positional. It is not going to be an intraday basis, and must watch out for the 24,200 to 50 odd resistance. On the downside, 24,100, 24,000, that range will also act as a support. So it's more going to be on a safer bet to just wait and watch and see how the writers behave, because the call writers of 24,000 are going to get challenged today. So it will be important to see where they place themselves next, whether it would be at 24,200 or 24,500 or so level. So I think it's better just to wait and watch and not hurry into any long trades on the gap up.
A couple of minutes before we, of course, do a quick recap of what is leading to this big party this morning. But Kush, your top trading ideas?
Sure, and after a while, both of them on the long side. HCL Tech has given a breakout above that 1875 resistance zone. So for targets of 1965, 2050, HCL Tech remains long. 1835 is your stop loss. The other stock from the cash segment is DOMS for targets of 30.30 and 31.50 and a stop loss of 27.70. DOMS can be considered as a positional long bet.
Interesting. I thought you'd have a longer list, Kush, this morning. But Soni, you want to quickly give us your top ideas?
So the first buy pick would be Laurus Labs. Now, Laurus Labs has seen very aggressive fresh longs on Friday. It has given a very good breakout on intraday charts as well. Plus, there's an option chain breakout above 500 level. So one can buy Laurus Labs on any small declines up to 510, keep a stop loss of 500, and a positional target of 535 to 540 can be seen. The second pick would be in Trent. Now, Trent was, we've seen a very strong correction in Trent. It took a base around 6,200. It was consolidating all this while at with a very strong base of 6,200. It never broke below it. So Trent, now it has come above the 6,600 mark. It has broken above that consolidation range. So one can buy Trent for a target of 7,000, keeping a stop loss of 6,350.
Right. Soni, Kush, stay with us. But of course, the reason for the euphoria this morning is the Maha victory in Maharashtra. And Tamanna's got a quick roundup of everything that happened and what that means for T Street. Tamanna, back to you.
So the election result in Maharashtra was predicted but not anticipated to this extent. I would go as far as to say even the winning side perhaps was not ready for the kind of numbers that have come. Even the most optimistic pollsters could not have seen a 235 seat tally for the Mahayuti or the NDA in Maharashtra. The opposition, the MVA, reduced to less than 50 seats. Among this, what becomes very, very important as far as Maharashtra is concerned, to see that which party got how many seats. And here the BJP has got the lion's share. What also becomes crucial is a strike rate, which is how many seats have you won out of the number contested. So out of 149 seats won, contested, the BJP won 132%. That's a plus 90% strike rate. The second best, of course, was the Shiv Sena led by Eknath Shinde, the former chief minister, who got 57 out of 81 seats. He's technically still the chief minister. Ajit Pawar's NCP has also done very well. 41 out of 59 seats contested. Now, on the losing side, you can see where the big hit is coming out of. So, you start off with what the Shiv Sena, Uddhav Thackeray faction has got. Only 20 out of 95 seats that were contested were won by them. For the Congress, the number looks even more dismal. 16 out of 101 seats contested were won. And Maharashtra is a state where they've had traditionally a fairly strong base. Let's look at what has happened to Sharad Pawar's faction of the NCP, 10 out of 86 seats contested. So why are markets happy? It's not just, that one party has won and then there's continuity. It's a little more than that, because on Friday you already had a rally beginning, considering that the Mahayuti would win. But the extent of the victory was not priced in, and which is why you are seeing the pre-open rates so positive this morning. What is expected to happen because of this? And let's come to that. A strong mandate for the BJP ensures now a stable 5-year term in a state which has seen so many musical chairs that it was difficult to track who was in which party before the elections actually came in. The bargaining power of coalition partners to claim the chief minister's chair is now greatly reduced, so maybe a reality check. That also becomes important. Projects already announced in the state will now pick up speed. And this is what you will probably see in stock prices moving, at least in the first half of the day today. The central government spending, which was expected to pick up in the second half, but will get a further boost because policy matters can go unhindered by politics now. And now that these key sets of elections are over. So, of course, infra, realty, FMCG, top sectors in focus. But let's quickly look at how the pre-open rates are settling in. It's been a couple of minutes of trade, so 350 points up for the Nifty right now. And even the broader markets are doing well. So, Samina, the only question now, I suppose, is how long does this sustain?
Mini risk on for now, at least we know that. But we have with us Parag Thakkar and Chakri both joining in. Chakri, thanks for standing by. Just very quickly, do you think the reason the markets were selling off was because of valuations, foreigners dumping India, earnings disappointing? of course, the reason why we're gaining this morning is because of political stability. Do you feel fundamentally there's enough reason for this mini risk-on rally to extend and become more medium to long term?
Good morning. In the recent past, we've had nearly a 10% correction, and this was based on actually an earnings slowdown. Earnings for the Nifty is largely flat if you account for inflation. Now, going forward, and also because interest payments for corporate India has gone up, which means the net margins for the whole index has come down. Against that, which means it only supports a lower multiple and not the higher multiples. Now, against this backdrop, many stocks have corrected, some of the PSU names, some of the infra names, and I think all those stocks will do well now, given that, we have had such a strong election result in Maharashtra.
What are you buying then, Chakri?
Hello?
Yes, Chakri, can you hear me?
Yes, can you hear me, please?
Yeah.
Like Nagarjuna Constructions and Infra, power financing names like, Power Finance, REC. And of course, the global trades like HCL Technologies and Infosys, they continue. But amongst the domestics, it's all the financiers.
We also have with us Parag Thakkar, head fund manager, Fort Capital, now joining in. Parag, you were with us last week, and while the whole world was a bear and was talking about why India was expensive and why you should be selling and not buying, you stuck your head out and said, I am deploying cash aggressively. The reasons might have been different than what is leading to today's rally, but do you still feel as constructive? I'm assuming you do, but you want to talk about it a little bit more?
Sure. So by nature,
you're a bull.
No, by nature I'm a contra person.
Achha.
So I would not say that I'm a permanent bull.
But today everybody is talking about bull run now. So
yeah.
have you changed
So
your
basically today, tomorrow, if Nifty rallies significantly, I would use some opportunity to raise cash again.
Oh, you would?
Little bit. But just to digress from that. From last time when we spoke about ICICI, SBI, Larsen, M&M kind of names, right? And all those names will definitely open up 2%, 2.5% higher, so like that. So today, for example, I have to discuss again a contra buy like Colgate, again, and with clear-cut disclaimer that you should buy only after consulting your financial advisor. This is just a personal view. Now just see, Colgate is of course this victory, the main foundation is this Ladki Behan Yojana, right, where they distributed 48,000 crores, and a woman between 21 and 65 years of age got 1,500 rupees per month in their account, right? So I would say that FMCG as a sector, which is beaten out of shape completely because of very bad results in last quarter. So there the volume growth was less. While you see, you find winners amongst the losers, right? So Colgate reported a high single-digit volume growth, right?
But let me just quickly comment on that, Parag. Consumption was weak because urban spending was not happening.
Correct.
Now with this, of course, these new consumption boosting strategies that the government has doled out, how will that 1,500 rupees help urban spending? I want to understand. So where will that volume growth come?
I think, see, first of all, the importance of I would say directly crediting money in the people's account, that has come after this Lok Sabha election, right? Right, till the Lok Sabha election, the only agenda was...
I would disagree a little bit. I would go back to 1 year ago, December 2023. And the kind of wins that you saw in Madhya Pradesh scheme actually was the first sort of big template for what we've been seeing. But yes.
So my point is that, see, Colgate showed 8% or high single-digit volume growth. Colgate showed resilience in margins. You used to look at things what they are doing. Prabha, the new CEO, whom I respect the most, they have started they have started increasing awareness. Now they have launched an oral healthcare movement, where you can get online, you can see what are the problems in your this thing, and you address it. Plus, the most important thing is today market cap is 74,000 crores. And cash profit, I expect, is around 2,200 crore. And they distribute 100% of the profits as dividend. So it becomes a 3% dividend yield stock also. And trading at only 35, 36 times FY27 with ROIC of more than 100%. Right? So I like to buy stocks which have fallen, like for example, Reliance. Reliance has also fallen so much from the highs, right? And now you see refining, there is some uptick. Retail, of course, in the festive season has done well, and Jio will do well because of tariff hikes. So valuations have become attractive. Net debt to EBITDA remains comfortable.
Okay, so we'll wait. We're just a minute away from markets open, so we'll wait for the top picks of Parag Thakkar as the markets open as well. But Sony, very quickly, after seeing how pre-open has settled, macro tech, of course, flying like we called it. But what would you do? Would you look at any of the real estate names?
So I think in real estate, Oberoi Realty is one stock which has been outperforming and looks quite strong. In fact, for a positional buy, it has given a trend line breakout today on daily charts, provided that it sustains above the 2000 mark as the gap up is indicating. Anywhere on a positional basis, the stock can head up to 2060, 2080 levels, and the immediate support that one can find is around 1970.
Very quick view from you, 50 seconds left for markets open. What would be your top call this morning? Chakri, if you can hear me.
Oh, sorry. I think you should. I would buy Power Finance and REC because it's infra financing, everything put together.
Okay, and what about any of the PSU plays?
SBI, Canara Bank, they'll again benefit from the infra spend in Maharashtra, big state coming back.
I wonder who's excited about Zomato. Zomato also in focus this morning, but there's a whole list of companies that you should look at carefully once this settles, once whatever we see happening in the next 9 or 8 seconds settles, because that's really the question. Where do you go from here, and are you going to see enough of an opportunity to ride this wave? All right, the first pointers now, the first rates hitting this morning, and yes, definitely looking positive as expected, not the kind of gap up that the implied open was showing. So about 300 points up. Not that we're complaining, but the Nifty comfortably above 24,000 mark, 24,282 right now, 1.5%. The bank Nifty also doing really well, but I want to pull up sectoral indices for a second, because Nifty IT, like we said, IT stocks will also keep benefiting, but it is Nifty Realty that is right on top. The PSU banks as well, PSU banks, Realty, public sector banks, oil and gas, all of them really contributing to the sea of green this morning. The India VIX though, quite, very benign, 8% down. So it's a beautiful screen. Let's pull up the heat map very quickly before Samina, of course, talks about the broader markets. All in the green, apart from a JSW Steel because of its exclusion from the Sensex. That's the only reason we can think of. But look at what's right on top. M&M, the stock that everybody has been talking about. Mahindra & Mahindra called by Motilal Oswal, by a whole host of brokerages actually very excited about M&M. Shriram Finance doing well, so is BEL. Adani Enterprises bouncing back about 4% up. State Bank of India, ONGC. So the companies that you would expect, Adani Ports also makes it to the first line. RIL having another strong move. So no real sulkers today. I would say a bit on the pharma side, which are, I wouldn't even say they're sulking, they're all in the green actually, but relatively not showing that much strength, nor is Infosys. Is this holding up though? That's the test, isn't it, Samina? The next 10 minutes becomes very important, or next half an hour or so becomes very important to see if you're holding up.
Yeah, and I think if you hold up, see a little bit of consolidation in the market, becomes a lot more attractive to go long in. But so you will get that pause, and that is market dynamic, right? Your call premiums have jumped up significantly, which is again not coming as a surprise because of the massive gap up the street has done. I'd highlighted for you a few sectors that become incremental for trade or long trades this morning, and anything that was Modi in that nature that has been doing exceptionally well over the last few years and has corrected significantly in the last few months are the top movers today. So railways, defense, shipbuilders, PSU. So anything PSU, you go out and go long on. That pretty much was the simple trade if you had that opportunity on Friday maybe, or of course if you get that opportunity over the course of the next couple of minutes. Well, a few stocks that I'll highlight may not be big movers, but this is where the news flow really is. Zomato becomes one of them. That has replaced JSW Steel in the BSE. But remember, they've also got an approval for their fundraising plan. Now, this could lead to equity dilution for existing shareholders. So may not be significantly positive in that sense, but but what is positive is the fact that they've now replaced JSW Steel. So passive flows will pick up on the counter. The stock is seeing a 6% up move in trade today. Railway stocks become a sweet playing field. So RVNL also has an order win to the tune of 800 crores, which I had highlighted this morning. It's a LOU that they've signed. So on back of the LOA that they've signed, on back of which the stock is up 9%. It's not just RVNL, it's a railway stock, which means it's PSU, so they're all doing well. The likes of a RailTel are also surging in early morning trade. I would put the Adani stocks as a good block that becomes a long trade, not for any particular reason, but just because they've sold off so significantly last week. Friday, we saw them recovering quite well. Today should be no different. So from Adani Enterprise to Adani Green, all those counters should continue with their recovery journey in today's day of trade, largely bouncing back in terms of their technicals, looking fairly encouraging as we see it. Consumption stocks, I put them out, but of course it's a lot more long trail in that sense. They are muted this morning. The space has been very impacted recently because of the slowdown in urban consumption. I am still trying to gauge how the policy action by the government is going to spur urban consumption, which has been declining. No direct correlation just yet, but maybe sentimentally some of these counters will see a positive up move. Apart from that, real estate, anything Bombay based, anything realty along with POC names becomes a good place. Again, the reaction is good. Oberoi is your big bet there, 4% higher. Sony highlighted this too, and Macrotech is up another 3%. Defense stocks showed up on my list at 8 a.m. this morning, and they continue to look like a good play. So anything in defense, like, we said, Bharat Dynamics up 6%. Cochin Shipyard should be doing well. Garden Reach should be doing well. All those counters seeing a 5% up move. So anything Modi, guys, is the trade. These stocks are down 40% in the last 6 weeks. So I think if you just blindly put your bets on this poker table, I think anything railway, defense, PSU, banks becomes the top trading ideas. So if you listen to us this morning, you'd have probably bought those stocks.
I mean, add Zomato to that list, about 6% up in opening trade because of the Sensex inclusion. So it's not just the government kind of push. That's definitely there, but reality, Zomato, some of those counters really doing well. I just want to pull up all the Adani Group stocks, and of course, standard disclaimers here that you're watching NDTV, that is owned by Adani Media Group. But look at all of the stocks and the kind of bounce back that you've seen. Adani Enterprises 2.5% up, Adani Green 4% up, Adani Ports, all of those. ACC and Ambuja actually had seen quite a bit of recovery on Friday itself, but Adani Power also up this morning. So you are seeing that kind of a bounce back. I want to see Adani Green actually once again. Let's just pull up Adani Green once again, because that was a company in the eye of the storm, and there have been a lot of statements from management coming in over the last 48 hours. Adani Green about 4.5% up. But let's get first views coming in after the markets have opened. And I think it's a sane response, Kush, I would say. It's a good response, but it's a sane response. It's a steady and positive response. It's not a blowout where you will see a cool off very quickly.
And quite heartening to see this, because if you would have had that gap up, about 150 points more from here, then the risk reward ratio for a long trade would have gone out of the window. So we spoke of, going long around 24,100, 24,200 kind of zones. That still remains. Also before the show, we were, before the start of the market rather, we were talking about whether we would see that kind of a dip. There is a likelihood that we might. Who would have thought that we'll be using the term overbought or overheated, just about 2 days ago, up until 2 days ago. That's what the PCR is showing. If you see the Nifty PCR, it's about close to 1.2. The Bank Nifty also similar range. With this kind of gap up opening, the PCR will move closer to 1.3, 1.35, typically from where we've seen some sort of profit booking. So any kind of pullback right now should be taken as a buying opportunity. The risk reward ratio becomes attractive. The momentum indicators will now see a positive uptick. So with a stop loss of 23,900 for targets of 24,500 and 24,800, the levels that we discussed, in the morning, a long trade on Nifty is still very much on.
Long trade on Nifty is on, but is it on right now? Kush, are you buying 24,238 on the index?
So
not for today. Thursday is expiry, so please be mindful of that too. It will be volatile.
So positionally, yes, I'm glad that you gave me that leeway of not today, because you see, positionally, we need that kind of a confidence in the market. Even right now, if you see, even if the Nifty is sustaining, some stocks, are seeing that BTST pressure and are starting to cool off a little. So if you give me that leeway of 2, 3 days, 4 days, then yes, positionally Nifty is a long from these current levels. Yeah.
Parag, last week when we met, you were buying HDFC, you were buying Ultratech. And a couple of other stocks that fundamentally, you were anticipating a solid up move. ICICI Bank as well. Yeah. Have you gone back and revisited the list because of what has happened in the Maharashtra election outcome?
Definitely. See, it's a structural positive that we have got a BJP back, mojo back into the system, and we have got a better political stability for sure. But as you rightly said, the stock prices also adjust, and so the last time when we spoke about M&M, say for example, it is 10% up from there, right? Or SBI or ICICI, of course. And I told you last time that you have to buy stocks doing 2 times, right? One, earning is at the bottom, which was for cement like Ultratech and Remco. I told you. Remco cement was because see, at the bottom of the cycle, the Remco was doing right thing by reducing debt, by adding capacity at a lowest capital cost per ton, which is $35 per ton. Same way today, I am telling you FMCG, which is beaten down.
So what FMCG stocks, Parag, do you like at this stage?
So Colgate ITC for sure.
Colgate ITC is I think 460 now, if I'm not mistaken.
Yeah, Colgate ITC for sure, and of course HUL at some point also. I'll definitely evaluate. The only thing is that, see, basically after this BJP is coming in for sure with such a big majority, all the stocks like railway, defense, L&T, SBIs of the world will definitely open gap up, right?
Can I ask you something? Maybe our viewers are also thinking. We keep saying that markets are cheering an NDA return, an NDA win, a BJP win. Is the market a political creature, or is the reason that...
no, I'll tell you, the positioning is important. FIs are short by 69%, net short 69%. So they'll have to cover it. Some part of the covering we saw before the result.
No. Why are markets cheering this win? Is it because it's an NDA win, or is there because it's continuity and stability?
Continuity and stability, of course. Continuity and stability is most important. Plus, we have to give full marks to this government for their fiscal, how they have managed the country in terms of fiscal, on the fiscal front, right? Fiscal deficit is low. Inflation, of course, if you avoid this retail inflation which just came due to seasonal factors, if you just keep that outside, current account deficit, oil is in our favor because oil is at 72 even after Middle East conflicts. So there are many macros which are already favorable. Only because September quarter results were bad due to prolonged monsoon, suddenly there were earning downgrades in the market, and which caused this entire correction from 26,000 to 23,500.
So that phase is behind us, or those basic issues still persist?
As I told you last time, I see only improvement in earnings in second half because see, October was a festive season, so many companies would have done well in October. November to Jan, there is a marriage season, so many companies will do, consumption companies will do in the, and Jan to March, India is a construction season.
Very quickly, I highlighted those Modi picks because those are the biggest gainers.
Sure, today they will
done
gain
really well for the last 10 years.
So basically,
going ahead, would you buy defense, railway,
or
avoiding it?
Yeah, so that is my view that you should buy them on a bad day when market is doubting them.
But then that's a trading play, Parag.
No, that's an investment play. See, you have to buy. See, I am not buying for my investors for today, right? I am buying for long term.
So you have defense.
Today, if it has opened 6% up,
you're not going to.
I am not going to. I'm not very keen.
Another thing which is open, another stock 6% up is Zomato. Will you buy it?
No, so basically, full marks to the promoter. They have done a wonderful job. The business is phenomenal, I would say. Everyone uses it.
Swiggy has the same business, but ignored by the market.
I'm saying just because market cap is 2,33,000 crore already, and it has rallied so much from the bottom. It is not under my circle of competence. The business is great. The promoters are great. They have done a wonderful job, and the business is a huge size of opportunity. It just doesn't fit into my way of thinking because of course it was fitting when it was below 100 rupees, but now at 2,33,000 crore market cap, I will be a little bit shy. And I will say that it is not.
Swiggy is fitting.
So I am just saying it is just out of my circle of competence. Otherwise, I would have bought definitely.
Sony, anything you spotted this morning? You mentioned Oberoi just before the markets opened up, and that's a top real estate gainer. Anything else? Quick trades that one could do maybe intraday, maybe for the next few days. 3 stocks is what I want from you.
So, Samina, I would still stick with Trent, which is holding above the levels, and it has the potential to test the 7,000 mark. So, I think that's one stock to continue with. A fresh stock at the moment for intraday can be Sun TV, which has broken above a 220 EMA resistance today on intraday basis. So, it is hovering around the 750 mark. 740 is the low that has made for the day. So I think if it's holding the 740 support in futures, one can look forward for a target of 765 to 770 for the intraday market.
All right, thank you so much, Soni, Kush, Parag and Chakri for joining us on what has been an exciting morning. But we are now, putting the spotlight on a very interesting company. Chintan Thakkar, Director and Chief Financial Officer, InfoEdge, is joining us on this exclusive conversation. And remember, this comes after a double upgrade from Goldman Sachs. They set a target price of 8,600 rupees and are very, very bullish on the company. Of course, their Q2 numbers were also good. Chintan, I'm going to ask you a broad question before I come to your financials. Employment and the rate of employment has been a concern in the first half of this calendar year. Do you see these issues easing, especially for IT companies?
Yeah. Also, good morning, first of all. And, your observation is bang on the point that, employment and the rate of employment issues for the IT companies in particular seems to be easing out. Since Q4 of last year, we have been saying that we are getting out of a U-shaped recovery and we are at the bottom and we will be kind of, going up from there. And that's what the Q1 and Q2 number has confirmed that looks like that we are on the path of recovery on the tech side as well as on the non-tech side as well. So non-IT has been doing it reasonably well over past few quarters, and that continues to be strong. But it's IT, and now we are also seeing a little bit growth in the recruitment consultant sides, and that's a good indicator because that tells us about the momentum. When the recruitment consultant starts buying the subscription, that's a positive sign.
Let me see all the, if you look at all the verticals of the business, 99 acres, maybe not that much. Of course, Naukri is the outlier, and then we'll come in a bit to how every day you look at Zomato stock price going up is exciting for InfoEdge. But, what is really firing all cylinders? And do you think 99 acres is going to have a tough time for a little longer?
It's a very long-term play. So I wouldn't say it will have tough time in that sense, but I think that's the journey, that's the trajectory, because a lot has yet to happen in the real estate segment. Most of India is yet to be built, right? So right now, 80-90% of our top line comes from top 8-9 cities. There are many more cities will grow. The penetration levels are still low. So there are many fundamental reasons for us to say that, look, it's a very long-term play, and it's not something which 1 or 2 year kind of will decide, how the market will move. Having said that, we seem to have reached a certain scale where we are deriving a lot more efficiency, and whatever the cash burn that used to be there in the past, it seems that we are reducing that, and we have been pursuing this theme of growing efficiently. So we have been growing reasonably well, but you will see that we have been also growing far more efficiently as compared to many other companies in the same but. So that's been our play, that we are focused on the core classified side on real estate, and we are growing more efficiently.
Yeah, Chintan, it's also Samina joining in. Citi and Bank of America projected EBITDA margins of 41 to 43% by FY 25-26. Realistic expectations, what do you think? Do you think you're going to meet those in terms of EBITDA margins? And also there's, generally speaking, I feel like recruitment margins I've seen are bottoming out. Is that a fair assumption for us to make on the margin front, Mr. Thakkar? And that would be your area of expertise, being the CFO.
So look, recruitment business, which is our largest, vertical inside wage, that's kind of almost like 75% of our top line, and that generates an EBITDA margin of almost like 55 plus. Currently it's like 57, 58, but it's always been 55 in that range. Okay? There has been little bit it chips away because we have been investing in verticals like 90. But as both of them starts growing more efficiently, and like Jeevan Sathi, for example, it's almost close to being EBITDA neutral. So unless we decide that as a next phase of investment in some of the other verticals, we start investing more, it would be reasonable to say that on the real estate side, if we keep growing at a faster rate than what our cost hike is, we would keep adding to the margins. So it's a fair assumption, but of course, as I said, that the caveat would be that if we decide to kind of start taking it to a next phase, and if we start investing more on some of the other verticals, then it can have some impact on the margin. Similarly, for in the recruitment also, if we start investing a little bit more on some of the initiatives, the experiments that we do internally, then it can have an impact on the margin. But I don't think it would kind of vary too much given the scale at which the margins are. It won't really affect.
Mr. Tucker, just want to spend a little more time to understand, what really happens as we look ahead. And I want to get a sense from you on the deferred tax. There was a deferred tax of 260 crores that has impacted your earnings from what we've seen. Does it also change the trajectory going ahead? And also, can you clarify the revised effective tax rate impact on long-term growth for us?
Yeah. Look, this deferred tax impact is straight coming from the changes that happen in capital gain tax in this budget. So when Zomato and similarly in Policybazaar as well, but particularly in Zomato, when it got listed and whatever the appreciation was there, we had to book that profit as mark to market. So the profit that happened from the original cost to the day of listing when it happened mark to market, there is also a corresponding tax provision that we need to make for the notional gain. There would be an element of notional tax as well. Right? Now, because of the change in the budget and the rate of gain tax, we had to take that additional provision in our books because we have already taken that notional gain, but the national tax element has. So I think it's more of an consequent to what has happened in the budget. That's the increase in our tax liability. If tomorrow,
with
not have any impact of how it. Just the rate of taxes again change.
Right. So just to stick with Zomato and PB Fintechs, your startup investments, and from what we understand, 33% to SOTP comes from the startup investments that you've made. So what is the upside on Zomato and PB Fintech? And also, are there any plans to unlock further value from these holdings in the near to medium term? How do you plan to capitalize on this journey?
We have been the founding investors in both of these companies. And to add to it, we have many more in early stage investments in these startups. The startups investment has almost become like our fifth vertical, and it creates a reasonable amount of value for our stakeholders. We really don't look at the daily ups and down movement in this stock because we are one of the largest shareholders in both these companies. We do believe that these companies have created a great business, and they have a lot more room to create a lot more value for their stakeholders, and we are likely to remain invested in time to come. Having said that, these are all board level decisions that happens, and we continue to review on a quarterly basis. But right now, the mindset is that we have backed them since 15 years, and we'll continue to.
Yeah, and we're asking you this question on a day, Chintan, that Zomato has seen a huge milestone. They have been included in the Sensex. Any commentary on that?
I think the full credit goes to Dipinder and his team. I think it's a fabulous team. The way they have executed, and particularly in the time when they were far more constrained for their funds, the competitive intensity was very high. I've seen them kind of going through certain existential crises and some of the softer aspects of managing a company, and I think they've done a wonderful job. So that's one of the key reasons why we are backing them, and we kind of fully trust on their judgment. So we are absolutely happy about whatever is happening, and congratulations to Zomato team.
Just one last question, Chintan. In terms of where will growth come from going ahead, you've already highlighted the existing verticals. Any new sort of business development that you're looking at right now, new investments that are being made into new emerging verticals, maybe locally or even globally?
Look, we have 4 verticals, and we think that we have our plates full with this 4 vertical. I think it's highly unlikely that we would get into a 5th vertical or an additional geography outside India. Having said that, all our experiments and all the investments that we are right now focused on is the quality of data, and particularly on the AI side and machine learning side. I think that's where our large focus has been, and I think that's going to be a play for next 2 or 3 years time, at least once.
Right. All right. Thank you so much, Chintan, for speaking with us. Chintan Thakkar there, talking about what is going up ahead.